If you look at every city in the world 100 years ago, you'll find that you would have lost your gold in every city on earth except for Geneva and Zurich. Bitcoin is competing with you buying land, or you buying stock, or you buying gold, or you buying currency and using it to store your value for the next 30 years or more. This is just technology. It's better technology. All you got to do is buy it and wait for the rest of the world to figure it out. Think savings account, checking account. In your checking account, you have dollars and you use that to buy coffee and use that to pay your bills this month. Your savings account is a store of value. You want that to go up in value over time or hold value. In America, people would never save their money in the savings account in dollars because it yields 0% interest. And the S&P index is up 40% over the last 12 months. And so if you actually saved in dollars, you lost 40%. So you would move your money into the S&P index fund, into an ETF, into the stock market. And if you had done that, you would get 40% appreciation. Now, that's not because the stocks are 40% better. That's because the dollar is 40% weaker. So the currency is being devalued. So scarce assets are going up in price against the devaluing currency. So stocks are an asset. Now, what if you don't live in the US? What if you live in Venezuela or Argentina or Zimbabwe? How do you buy the S&P index? You can't. So what do you buy? You buy Bitcoin. Bitcoin is going up faster than the S&P. It's gone up 280%, not 40% in the last 12 months. Ultimately, when the dust settles, even if all these countries collapse and their currencies collapse, what's likely to happen is everybody gets an Android phone, they get digital wallet, they get US dollar stable coins, and then they have Bitcoin, and that becomes their checking account, their savings account. The economy clears. If I need to move Bitcoin fast, I move it on a lightning rail. And if I want to move it slow but securely, I move it on the blockchain. And in that environment, you can synchronize 8 billion mobile wallets with 100 million companies using Bitcoin as the underlying settlement protocol and using either Lightning or as some centralized protocol as a transactional protocol at the application layer.
How will other countries benefit from China's latest move on the banning of Bitcoin and mining? You mentioned something very interesting also, that when countries would collapse, do you see it at the point where more and more countries will follow El Salvador over the next few years? Or do you see more countries lining up towards China, that they'll be more restrictive towards Bitcoin?
I think that China has capital controls. They don't let you convert your Chinese currency freely to dollars and move it outside the country. So there's the Great Wall of China, and they've set up that wall for capital. And the Great Wall of China also exists for internet. And they don't let you use Facebook. They blocked Facebook, they blocked Google, and they blocked Twitter. And they block a lot of websites. So this is very consistent. Just like China blocked Twitter and Google and Facebook, they're concerned about Bitcoin because Bitcoin would be freedom outside their country. I don't think it's threatening to Bitcoin in the least. Because, I mean, look at Google, right? If China blocks Google, does that stop Google's success? No. I mean, Facebook's worth $1 trillion, Google's worth $1 trillion, Apple's worth trillions. I mean, and all those and Twitter is worth quite a lot. Because if China blocks it, it makes it actually more powerful in Western Europe and the United States and the rest of the world. So that's what's happening there. The profitability of Bitcoin mining is somewhere between tripled and quintupled, right? Because the hash rate on the network has been cut by 65% or 60%. Which means that all the remaining miners are getting 2.5 times as much revenue. They've doubled their revenues, but their costs have stayed the same. And so in any business, if I doubled your revenues and your costs were the same, if you were running a 30% margin before, when I double your revenues, you're running a 65% margin. and your operating income triples or quadruples. So Bitcoin mining has become much more profitable because China shut it down. It's a disaster for China. It's $1 trillion mistake. I mean, they had 60% of the market in a business that was growing 100% a year, that was going to go to $100 trillion or more. So giving up all of that, right, is awful for the country. But I guess, but the nation has made other $1 trillion mistakes. Like, I mean, blocking people from infinite free information from Google, right? There's an economic cost to those things. They did it. It's not good for Bitcoin miners in China. They have to leave. It's a tragedy for them. I feel bad for them. And it's driving a decentralization of the Bitcoin network. So Bitcoin holdings are decentralizing. All the people that own Bitcoin in China had to sell it at a massive discount. And the people in the west of the world got to buy it at a discount. And all the Bitcoin mining equipment is going to all these other countries, where it will be a massive revenue generator for them. So generally, I think it's good for Bitcoin long term. I think it's jarring, driving volatility near term. But this is one of the reasons why you don't really want to, you don't want to look at the price. I mean, if you're a trader, you can trade on it. You can go long when there's long leverage and go short. But I just think most of the time traders, if you look at all the wealthiest people in the world, they're not wealthy because they're traders. They're wealthy because they're holders, right? The people that if you owned Facebook for 20 years, then you're Mark Zuckerberg. Name a person that traded Facebook stock and shorted it. I can't name a billionaire that made billions because they shorted Amazon and they shorted Facebook and they shorted Apple. Everybody can name billionaires that owned Microsoft, Apple, Amazon, and Facebook.
I want to ask this question for people regular employees, people who have money that they can allocate. If you were in their position and they're just starting out right now, what would be your style and strategy to accumulate Bitcoin? And portfolio strategy wise, what percentage would be a good enough amount that they could actually start with as well?
You can't go wrong with dollar cost averaging. Like, our company sweeps our cash flows into Bitcoin. We have a certain amount of cash that we keep as working capital that we know we need to pay bills for the year. And then long-term capital that we don't need to pay our bills, we invest in Bitcoin as it comes available. I think that everyone has their own investment strategy. It makes sense to allocate some portion of your capital to land, real estate. You want to live in the rest of your life. If you have someplace, a home, right? It makes, if there's a business that you love, maybe you have some capital in a business that you believe in. If there's scarce property that you think will be valuable 20, 30 years from now and you want to own it, I think Bitcoin is the apex property of the human race. I think it's the best property long term. And so I lean toward buying more of that. If you want to be rich, if you want to make a huge amount of money, then you have to acquire a lot of a high quality asset and hold it, right? Right. The way that billionaires get rich is they either bought $1 billion, they bought $1 million worth of something and held it and went up by a factor of 1,000, or they created that asset. Like Jeff Bezos created Amazon stock. So they tend to be very concentrated in something. So if you want to make huge amounts of money, you have to place a bet on something, right? Whatever it might be. Howard Hughes bought all of Vegas. You place a bet. If you want to preserve your wealth, you spread your bets around. But if you're going to diversify in this environment, I think you want to diversify into scarce assets that cannot be devalued based upon currency.